Good morning, everybody. It's Max. It's about 9:30 here in Austin, so probably 10:30 on the East Coast. Let's check out. We're going to look at Defiance. Maybe we'll take a quick look at the buffer report, but it's kind of early to be looking at the buffer report. So let's check out Defiance. Okay, first of all, USOY. This is for Mark. I promised I would, not just for Mark, but he's one of my people. I know that one of my viewers that watches this that likes USOY. I fixed the estimate. It's pretty high. It's $1.36. Okay. So, but we're going to keep an eye on it. It's early. It's a low sample size. Okay. But in any event, these guys have the 76 strike option sold. I believe it expires tomorrow. Let's pull up the chart of it real quick. Then we'll look at these index-based ones. I tend to kind of talk about the stock index-based ones because I'm a stock guy, but this is an important one too for diversification's sake, to be able to earn income off something other than a stock. Even though oil and stocks are fairly correlated, it still makes an interesting investment. Anyway, I was hoping yesterday was just a pullback, or the past couple of days. Sure enough, it looks like we're bouncing today in the oil market. We just want to be above 76 by the end of the day tomorrow. Okay. All right. So now let's go over here to the index-based ones that I always love so much. We'll start with JPY. All right. So JPY, these guys sold the 5084 strike, 25 bucks. We'll just call it 25 bucks. Right now the market's trading at 57.82, unfortunately. So let's put that number right there. And then that's going to create a little bit of a loss here. We're trying to make 425 initially. Right now, we're only earning 49,000. So down 2 cents a share on the month. Dividend estimate is 42. Okay. I'll make it better, but for right now, dividend estimate is 42. So we'll see. They pay weekly now, so that's why it's less. All right, triple QI, these guys sold contracts at 2320 level, so 20,320. Right now, the market is trading at 20,202, so that is like 117 points difference. See, I think my brain's working good this morning. I think that, yep, I nailed it that time. I got that one. All right, so in this fund, I need to work on that earnings per share. That doesn't look right. All right, so this fund, the dividend estimate is 46 cents. All right. Pretty sure I just fixed this yesterday. It seems like I fix the same thing every day. The earnings per share is always wrong. Okay, well that's right now. They're actually up 74 cents a share a month. I literally have to fix that every day. I don't know why the spreadsheet won't save the formula. All right, so now let's look at IWMY. All right, so these managers sold the 2208 strike. Right now the market's trading at 2183. So that's 17 plus 8, whatever that is, 25. I think that's like 24, 25 points in the money, something like that. We'll have they'll have the formula work it out instead of my brain. Well, was it actually 28 points in the money? Okay, well, I'm batting 500 this morning. So these guys are down 15 cents a share, and this one's right. And the dividend estimate is 56 cents. Now that seems kind of high. So that just seems kind of high. Just making sure everything's good. It looks like it is. Still says 56 cents. Anyway, that one's kind of high. We'll keep an eye on this one. This one is more volatile. So let's look at the chart of the past couple ones we talked about. So here's first NASDAQ. It gapped down today, so this is going to most likely penalize the round hill funds. Let's see, SPX. It also gapped down today. Then we're going to do Russell, which is what we're talking about now, IWMY, and that one gapped down even further today. So let's look at, yeah, they sold the 22.08 for $16. Let's see, 91 to 22.08. It looks like there's no profit box here. Let's draw it in real quick so we can see how much. There was a big economic number out this morning, and they obviously got a lot of premium. Look how big this profit box is. I'm sorry, I could have sworn I drew this already. But there it is nonetheless. So you can see these guys have been earning the premium. I mean, the 2 days ago that it was even bigger than today, just eyeballing it. But we've had a lot of premium lately. So I guess it's not out the realm of possibilities. We can also maybe take a look at the round hill dividend, because I believe it comes out a day before this one, and I'm going to start doing that because one does nighttime and one does daytime. But anyway, it'll give us a proxy for if premiums are going up or down before we have to guess this one. So we'll check out both of them. Get the new buffer report. So this is index based. This is index based. High yield funds. So USOY and USO is killing it again today. And we saw that because it's gapping up. Everything else is gapping down. So most stuff's down. ZIVB and SFAL are pulling back, and they're pulling back more than the underlying. And there's XTT. I told you because of the gap down, they're going to get penalized. On gap downs, they get penalized, but on gap up days, they get a bonus. Well, they're looking at a little penalty right now, or at least the market's assessing a penalty to them. These stocks, ETFs, trade somewhat freely back and forth. But the market makers and arbitragers or whoever won't let the price get too far away from how well the ETF is really doing. So there's other people that are looking at these option trades too, market makers that have way better data and probably get the data faster. Anyway, and so they know where to put these prices. So I'm using the prices as a proxy for how much the fund made, but it's not always a 1-for-1. It's a proxy. But anyway, you can see we would expect XDD to be having a bad day today, and the market's punishing it. In other words, we're kind of assuming the market's somewhat efficient in making the prices. Now, I don't think that's the case on iSpy for whatever reason. iSpy, maybe it's not very liquid, but the iSpy number is always jacked up. So it's so jacked up, I just don't even usually look at it. Also, when it's early in the day, sometimes let's hit refresh. I would like to think SPY T is really up that much. That's awesome too. SPY T is a great fund. It's just like the new Yield Max funds in that it has uncapped upside. Okay, well, let's just check a few of these that are up and a few of these that are down. Just kind of see how they're doing. So let's go over here to old Mr. SPY T. SPY T is up a nickel, 5 basis points. So this is not right. Okay. Oh, wait, SPY T, yeah. Wait, there's SPY T. Okay, so that's not right. So I assume iSpy is not right either. These buffer reports would be great if Google Finance actually worked. I mean, where I could rely on it. But whenever I see like an ETF doing really well in Google Finance, I assume, it's an error. And that's, it usually is. Yeah, and see, look at this. iSpy's down. So maybe I need to scrap the buffer report. All right. Well, since you're here, let's look at the single stock, see what's moving. But these are subject to the same problems as the other there's the other, but right now, not too much is up. Amazon and Nvidia, Snowy, Airbnb is doing well. On the downside, AI, Murny, AIYY and Murny. Tesla's pulling back a little bit, and so is MSTY. All right, so now we're going to look at Max's volatility report. It's still bearish. Maybe not much longer though, but you can see, especially this, and this is more what I'm calling professional volatility or people in the know or whatever. And look how much more bearish this is. And bearish means high because volatility is opposite. So, so this is a pro measure, and this is more a retail measure. But when the retail guys get under the 200-day, and if they get under the Bollinger Band and start selling off, yes, then the market will probably rally at that point. All I'm saying is it doesn't look like the guys that trade for a living are that worried about it. A VIVIX, which is a VIX measure of the VIX, now get it, VIVIX of 120 is obscenely high. It doesn't guarantee that something bad's going to happen, but that's obscenely high. Someone thinks something's going to happen. Whether it does or not remains to be seen. It's not just me. Jay Pestruccelli is a big follower, and the guys in his firm are of the VIVIX. It's one of the inputs in a lot of their models. And I don't know how they're using it or whatever, but I'm just saying it is something key to look at on a daily basis, and that's why I show it to you guys. But it's also important to compare it with just the VIX index, which is they're different measures. But anyway, they're interesting to look at together. Then we can also look at VIX futures. Now, VIX futures trades 24 hours a day. This is the most retail of all of them, and this has been bullish for a while. But I have to, my rule, it has to be 2 out of 3 of them have to be bullish of the 3, VIX futures, VIX cash, and VIVIX, and one of them has to be VIVIX. You have to have the pros on your side. So if VIVIX would cross under the 200-day, my system would start saying, okay, it's green. Green means go, let's go. Start, But VIVIX doesn't look like it's anywhere close to crossing under the 200-day right now. So we'll keep an eye on it. We shall keep an eye on it. So now let's look at, so that's cautious. JP Morgan has earnings after the bell today. I have a trade idea for it. If anyone's interested, leave it in the comments. I'll share the trade with you here. But this is an asymmetric risk reward trade where for earnings, where JP Morgan miss earnings and they go down 4%, let's say. This trade's down 3%. So it loses less than stock would. That's the way it's designed. It has max convexity. But whereas if they make 4% on the trade, they'll make 2.8%. Okay, but where the convexity kicks in is if they make 5%. They make 5%, this trade's up 4%. If for some reason JP Morgan goes up 10%, and it could after earnings, it's not impossible. This trade would be this trade's up 13%. It gets about a 30% bonus on up moves. But on down moves, for instance, if JP Morgan moves down 10%, you would be down 10% in the stock. In this option trade, you'd only be down 9%. Anyway, if anyone's interested in this pre-earnings trade, earnings are, or have earnings already happened? Oh my gosh. Let's see here. Now, Friday the 11th before the bell. So they're tomorrow before the bell. Okay, if anyone's interested, or hell, I'm just going to post it in the comments. You don't even have to. I like doing option trades. Option trades like this for a long time would have never worked because of the commissions. A 3-legged trade across, multiple expirations, not going to happen. And also the lack of liquidity and the lack of, it just wouldn't have happened. The lack of expirations, lack of liquidity, lack of strikes. Nowadays, you can do things that you could have never got away with to put the odds in your favor. And where the odds really play out in this one is if JP Morgan misses earnings, goes nowhere, or if it goes down a little bit, because it has to go down more than you have a 1.2% buffer before you start losing money. But wonder if JP Morgan just, it misses earnings. Most other trades where you just YOLO calls or something, you aren't you're going to be screwed. But on this one, it monetizes no moves too, because you're trying to sell options. It monetizes lack of move. I mean, if you can just get it to go up 2%, this trade's worth $300. But in any event, you have to be comfortable buying stock. It's just like buying 100 shares of stock, except not really, because you only have about 90 delta. You lose about 90% on the way down, and you make about an extra 20 to 30% on the way up. That's convexity. You have asymmetric risk and reward, and convexity is a tailwind at your back. The way you can make more than the same move the other way would cost you to lose. Down 10% is a $1,900 loss. Up 10% is a $2,700 win. If you believe in the random, market, the random walk down Wall Street, the efficient market hypothesis, no one knows what the hell direction this thing's going. We do have earnings coming out. We think it's going to go, it could be up big or down big. So that's kind of what we're playing for. But you can see the asymmetry right there, because let's say over the course of a lifetime, half the time this is up and half the time it's down. If you do a trade like this every time over the course of your life or a year or whatever, where you're essentially risking 1,800 to make 2,700, or that's kind of the payout, the skew and payoff you're looking for. Anyway, I love these types of trades. If you guys do too, let me know. All right, guys. Well, that's it for the Defiance report. Sorry, you guys got a little extra option lesson. But I will save this trade, and I will copy the link and put it on the description. Well, let's see what the market's doing. Before we leave, let's check the SPX. Straight sideways. Straight sideways. One more thing is, how even though the market appears to be breaking out, volatility is not selling off enough to make my system bullish. Well, maybe volatility is not selling off because, that number wasn't great this morning, but the pros probably know that number's not going to be great. And maybe they know some other stuff down the road's not going to be great. The idea is they're keeping volatility elevated by keeping their hedges on, and it keeps volatility elevated. So until they take their hedges off, we're going to stay cautious too. Even though we aren't pros, we're going to try to follow them. It could just be higher volatility in front of the election. It could be nothing, no big deal. So we'll see. All right, I'll be back with the yield max report later, and I'm going to start putting the election stuff on a separate video so I don't offend anybody. And I'm not trying to be political, but I'm just going to put the election stuff separate from now on. One more thing. I have an interview with Cy from Tap Alpha tomorrow at 1 o'clock, I believe. So be looking for that. I know a lot of people have been requesting that. Tap Alpha has been doing really well, and they made they paid like a 14% dividend. And he told me during our interview, they're only going to pay 6 to 8% is what they're expecting to pay. Now, I think it was about a month and a half. So I bet that's all it is, but we're going to talk to him tomorrow. And, if you guys have any questions for him, put them in the comments and, or get a hold of me. All right, guys. Appreciate you. See you.